The Dow Jones Industrial Average is up over 10% in total return in the first quarter of this year, but you might be surprised to learn that it's up less than half of that in the last 6 years. And here to share more about it is Dylan Bond. He's the owner of Bond Financial Services, and you're going to help us understand market volatility.
Good to be here.
Everyone is excited because the market's up. It's going up and up every day. But it's not necessarily great news, right?
Well, I wouldn't say it's not great news.
It's good. Any day that's a up day is a good day.
Exactly. But I think the lesson to be learned here is that you have to understand the numbers. And if it's up 10% in the first quarter, the Dow Jones Industrial Average is up a little over 10% in the first quarter of 2013. But if you go back to the high point in 2007, to where we are as of last week's April 10th close,
yep.
It's up less than 0.5% in that longer period of time, that 6-year period of time.
So when you stretch out that line graph, it really isn't enormous growth. It's more gradual growth.
Right. So it really depends on when you got into the market. If you got into the market in 2008 at the bottom, as of April 10th last week, what you'll find is that the Dow Jones Industrial Average is up almost 80% for that period of time. So it really depends on when you got in and where you are today.
That's true. If you put $100 in before the market crashed, let's say it crashed half, you had $50, and that's the money that's building up interest, as opposed to, when the market's at its lowest, putting in that $100.
Yeah, the lesson to be learned is that the market is always going to have volatility. I don't think there's ever going to be a point in time where the market goes consistently straight up at 8% for a 10, 15, 20-year period of time. So you have to plan for that. And as we talk about all the time at our seminars and on this show, if you have enough money available to you that is in a place where it can't go up and down a lot, that you can access when you need it, and you have enough income coming in to pay the bills and do the things you want to do in retirement, then that other piece of money that's exposed to the market for the long term, as it goes up and down, it shouldn't have that much of an effect on you, and it shouldn't cause too many sleepless nights.
It's that extra money. It's that extra pocket of money that you're kind of leaving a little bit more to chance, calculated chance.
Right. If you go back as far as 2003 and look at the last 10 years, the market's average, the Dow Jones Industrial Average, has averaged about 8% a year.
Now, when you say average, there's two major industries. There's the Dow Jones, and there's the S&P 500. And for people out there who don't know, just briefly let us know what they are, because we read that number, we get excited by it's up 100 points, but we might not know what it means.
I mean, it really, the S&P 500 is an index comprised of 500 different companies. The Dow Jones Industrial Average is another index that is widely called the market. Okay, so most people are calling these indexes the market. When you hear people talk about the market, they're either referring to the S&P 500, the Dow Jones Industrial Average, or sometimes the Russell 3000 index. And all these are basic indexes that are supposed to give a more broad-based view of what's going on in the stock market.
So it's a small microcosm that speaks for a larger industry that is the stock market.
Yeah, and you can go on even like a Google website search and Google search any of those indexes, and it'll show you all of the companies that make up that index and the different weightings that they have. And that's something that I would advise everybody to take a look at.
Now, Dylan, if people want to expand their financial literacy, they can come to you and you can point them in the right direction and help to teach them. But also, if people don't want to expand their financial literacy, they can come to you and kind of wash their hands of the whole thing.
Well, yeah, I work predominantly with people that are 50 and older, and we're helping people that are at or near retirement. For those people, if they want to learn more about the way that I think and the way I do things, I host seminars on a week-to-week basis. We have them coming up next week and going forward week after week.
And there are some tasty restaurants too. You have, Villa Rose, Tucker's.
Right. The way I see it is I'm committing some of my time. They're committing some of their time for them to understand what we're all about. For that, we're offering dinner. And if they learn enough about me there that they feel that they want to talk to me on a one-on-one basis, then at that point in time they can decide to come into my office and we can talk in more detail about their specific situation. Again, the one commitment I make to everybody is that there'll never be any selling in that first appointment. It's going to be more of a learning session or a data gathering session where we'll get a feel for who they are, what they do, and make sure that we understand them before we start making any recommendations.
Well, it's kind of like a blind date. You need to make sure that you're right for that person.
Yeah, you have to. The way I approach my business is to try to educate people on what I think they need to know, how companies and accounts charge fees, the risks associated with different types of accounts, any surrender charges or rider fees and mortality expense charges that come with some accounts that a lot of people own out there. Again, there's a lot of things out there that most people don't know to ask about, and that I do, and if I can bring that to light, they'll better understand the products they own and what else is available out there.
It's so important to get all the pertinent information, because otherwise you feel like you get had sometimes in these situations. Lastly, Dylan, if people aren't in the mood for dinner but they want to hit the links, you can teach them 7 fundamental ways not to outlive their money on the golf course.
Yeah, we've been doing, this is going to be our 4th year. We're doing it at Twin Hills Country Club in Longmeadow, Massachusetts. A beautiful golf course. We do the same seminar we do at the dinner restaurants, but we do it in the morning at Twin Hills Country Club. We serve breakfast. I talk for about 45 minutes, and then we turn them loose for a round of golf at Twin Hills, and it's been a great way for me to meet new people, and I encourage anybody that's interested in doing that or coming to one of our dinner seminars to call George at our office and find out the availability and the upcoming dates. They do fill up quick, so make sure you call as soon as possible and find out when we're having them.
Well, Dylan, thanks for having us every Wednesday. It's a pleasure to have you here. And for more information on Bond Financial Services, you can visit bondfinancialservices.net, or you can give them a call, 413-754-4747.